Body, hey, thank you for joining me this evening. We are rocking and rolling. Just want to do a systems check with my team. Make sure everybody can hear me okay. How's my sound on the airwaves? You guys hear me okay? Give
Yeah.
me a okay, outstanding. We'll get right in here to it. Okay, cool, y'all. So Perry Jeffries here. Thank you for joining this webinar this evening. We'll keep all questions to the end, or feel free to type your questions in the chat. Super excited about this webinar. This is our second one on this, but actually third one on this particular topic. Just because it's a hot topic, we know it's important, especially for small businesses and entrepreneurs. So jumping right into it, y'all. Diamond Equity Advisors webinar. What you need to know about the SBA Eidl, we call it for short, the Economic Injury Disaster Loan. So guidelines and strategies for spending and investing. So you got to almost be underneath a rock if you're a business owner and not be familiar with, the EIDL loan and or heard talks of the EIDL loan and the PPP loan. So we'll jump right into it here. So the EIDL loan via the CARES Act, the Coronavirus Aid, Relief, and Economic Securities Act, rolled out and made the EIDL loan available. So with the EIDL loan, as another SBA loan, you have the EIDL loan, and then you have the PPP. A lot of people talk about that one. That is the Payroll Protection Program. Okay. Now, the CARES Act can be super confusing because there's so many moving parts. And the CARES Act was the government's knee-jerk reaction to the pandemic and the impact it was having on our economy, on our finances and health and all of the above. So the government just started rolling out legislation, and it was coming at us so quickly that everybody was trying to keep up with it. And even individuals in the financial space were having issues kind of trying to decipher the rules and the laws and the regulations and what you can and what you cannot do. So it's confusing. So we totally get that. That's one of the reasons we want to do a quick webinar here for you. So why is it confusing? Well, when you have lawyers, politicians, and bankers all getting in the room and writing some laws and creating offers and things of that nature, that is the perfect storm for confusion. So what we're going to do here is discuss the EIDL loan, economic injury disaster loan, and put it in layman's terms that you guys can understand and be able to walk away with some clarity. So just to be crystal clear, we're not here to give advice. We're here to provide clarity. So bear with me here. I'm going to X out of this menu. So perfect. Okay, cool. All right. So again, not here to give advice. We're here to provide some clarity. All right. So before we get into that, I just want to give a little backstory on a little my background, if you will. Not that it's important, but it's very important sometimes that you know who the messenger is, who's delivering the message, because unfortunately, I see it on social media daily where people are giving advice on topics that they have zero expertise. And sometimes it's just really, really concerning. So here's a little, backstory on myself here. 17 years in the financial service industry. I've held positions VP and above with 3 Fortune 500 companies. I've held a Series 7 license, which is a stockbroker's license, a Series 66, which is an investment advisory license, and also a life, health, and annuities license. I have a designation through the College of Financial Planning as a Chartered Retirement Planning Counselor. That's a CRPC. By their standard, I'm an expert when it comes to retirement planning, asset management, and just helping individuals. I also have a CPFA, so that's a Certified Plan Fiduciary Advisor designation through the National Association of Plan Advisors. Per their designation, I'm an expert when it comes to retirement plans for businesses such as 401ks, 403bs, things of the like. In addition to that, I am a certified Profit First professional. And at the time of this recording, I'm one of 350 Profit First professionals in the entire country and the only one who is a fully licensed financial advisor. The majority of Profit First professionals are CPAs, bookkeepers, and tax professionals. Had the opportunity to partner and work with Damon John, our favorite shark from the Shark Tank and founder of FUBU, as an ambassador when he released his Rise and Grind book. And in addition to that, I'm a John Maxwell certified speaker and coach. A lot of times people see the John Maxwell piece and say, Perry, why did you go that route? Well, John is real big on leadership, and he has a quote that says, everything rises and falls with leadership. And I believe that wholeheartedly, especially when it comes to our finances and our businesses. We've been seeing on ABC6 as well as featured on Fox 28 with a standing segment called Financially Fit Fridays with Perry. In addition to, I'm a standing speaker for the third consecutive year for the Ohio Society of CPAs, as well as have taken a national stage at the American Institute of CPAs, giving a presentation on cash management and cash flow. We've managed about $80 million in clients' assets throughout our time in the industry, and we worked with hundreds of entrepreneurs and small business owners across the country. So that's just my background. Again, we're moving right past this because this is not the important information, but it's good, you should know. So why did we decide to host this webinar? Our mission here at Diamond Equity Advisors is simply this. We want to close the wealth gap one business at a time. There was an article that came out in 2017 that said, prior to 2017, the leading indicator of wealth in the United States was inheritance. So legacy, which you received from, your family or your loved ones and what's been passed down, generationally, if you will. Well, in 2007, inheritance took a second seat to entrepreneurship. So now the playing field has been leveled where we can actually go out and create wealth via entrepreneurship, but we got to get it right. So that's a good place to be, if you will. So this is our challenge when we start thinking about entrepreneurship. Before the pandemic, y'all, there was 83% chance that your business would fail. So these aren't stats I'm just pulling out the air. These are actually hard numbers here based on the SBA. 83% of small businesses were failing or have failed and are accidentally killing their business. So this was prior to the pandemic. Do you think about the pandemic and the impact it's had on all of us here? What do those numbers look like now? So this was a challenge even prior to. So the question was like, what were these businesses doing that so many, 83% of them were failing? Well, these are the symptoms that you may accidentally be killing your business. So what I want you to think about is put your hat on and say, hey, let me think about my business pre-pandemic, right? Because the pandemic has impacted all of us. But pre-pandemic, were you accidentally killing your business? How do you know? Here are some symptoms. One, you owe taxes because you spent all the business income. So I've yet to meet too many entrepreneurs, almost if any, who when we sit down and we lift up the hood and look at their finances, that they don't have a tax situation going on. Number two, using business funds to pay for personal expenses. So that is effectively commingling, or what we call here at Diamond Equity Advisors, you are micro embezzling. So if you were a large enough company, the FBI may be knocking on your door for embezzling, funds, for using personal to cover business to cover personal. Number three, you struggle on how to pay yourself separately from the business. We hear this all the time. Perry, how do I pay myself? Number four, you wonder why you have no cash profits to show for all your hard work. You got a tax return that said, hey, the business had, 20,000 in profit or 50,000 in profit, and you're paying taxes on those dollars, but you don't have those dollars sitting in the bank. So you have no idea whether or not the business is profitable, or you're waiting to the end of the year for your bookkeeper or your accountant to tell you, oh yeah, the business was profitable, where you should know the profitability of your business every minute of every hour of every day, month, year. Okay. And now five, you're probably mismanaging the government SBA loans. So those are the signs or symptoms that you're accidentally killing your business. So something we coined is, making more money doesn't fix a broken financial system. A lot of times the fix that we all believe is, hey, if I had more money, everything will be okay. If I had more clients, everything will be okay. If I generated more income, everything will be okay. Or, hey, if I could just get a loan, everything will be okay. Well, unfortunately, everybody, more money doesn't fix a broken financial system. The challenge is, what happens if you add more gas to a faulty engine? So imagine you have a vehicle, the engine is already bad. What happens if you add premium high octane gas to that? That's right, the engine more than likely is going to explode, because the issue wasn't the fuel. The issue was the engine or the system. So we don't want this to happen to you. So that's why it's super important that you pay very close attention as we go through this information. So let's jump right back into the EIDL loan. What is the EIDL? Well, the purpose of the EIDL program was to extend low interest credit to small businesses that are impacted by disasters via the SBA. Hard pause. The idle loan is not a new program, y'all. This has been around. It's been around for decades, actually. It's just the first time that all of us have heard of it. So a lot of us, you know, when we this program rolled out, it's like, oh my goodness, raise my hand. I need to idle money. I've been impacted by the pandemic. This is not a new program. The idle loan has been around for decades, and the purpose of the idle loan was to help businesses who were impacted typically by natural disasters, hurricanes, tsunamis, tornadoes, earthquake. So imagine your business was hit by, you know what I'm saying, a tornado. Boom, right? Well, you need some assistance to keep your business afloat, right? So with that being said, that was the purpose of the EIDL program. Well, the government then decided that, hey, the pandemic is quote unquote a natural disaster. So again, it's not a new program. This program has actually been around for quite some time, which means it already has rules to it. Now, so again, what are kind of how's the program set up? It's a really it's a loan with really good, favorable terms. Let's put it that way. So 3.75% interest rate on a 30-year loan if you're a business that's for profit, 2.75% for a 30-year loan if you're a nonprofit, right? So get crystal clear, because sometimes we think people believe that they mix up the PPP and the EIDL loan, the payroll protection program and the EIDL loan. This loan is not forgiving. This is truly a working capital loan. There's nothing that you can do to make this loan forgiving other than give the money back after you receive it. Okay, so this is a loan. So first thing, let's get crystal clear on that. But it does have favorable terms. Anybody would say, looking at this, that, hey, this is a pretty good term. Like if we're looking at a 30-year mortgage at 2.75% or 3.75%, you say, hey, you got a pretty good deal. Now, loan can go up to $2 million, 30-year terms, interest rate, again, 3.75 to 2.75 for nonprofits. The first payment of the loan isn't due for 12 months. So from the time that you receive the money, you have a 12-month window before you have to make your first payment. Now, EIDL loans smaller than $200,000 can be approved without a personal guarantee. Now, I want you to pay very close attention to this language. Without a personal guarantee. And for loans under $25,000, SBA does not take security interest in any collateral. But for loans above $25K, the SBA takes a general security interest in any and all collateral as defined in the promissory note. So if you've already received this money, you have already signed this. If you got more than $25,000, you have already signed this. And also, too, there's no prepayment penalty, so you can always pay the money back. But going back to this section right here, as it speaks to, for loans above the $25,000, let's keep moving and make sure we get crystal clear on that. Again, the purpose of the loan is for working capital needs. So the EIDL may be used to pay fixed debts, payroll, accounts payable, and other operating expenses. Okay. That says nothing about, hey, can I use the EIDL loan to go buy a property and flip it? Says nothing about that. Says nothing about, hey, the EIDL loan is for me to go get a Lamborghini as a company car. Says nothing about that. So again, let's go back to the purpose of the EIDL loan, and it was originated to help businesses who were being impacted by a natural disaster, right? So the EIDL loan is really there to help cover expenses that you would normally have anyway. Okay, so fixed debts, payrolls, account payable, and operating expenses. These were things that you probably have to pay anyway. You know what I'm saying, that you were already paying. That cannot be paid because of disaster's impact. EIDL proceeds cannot be used for the following purposes: expanding business operations, paying cash dividends, and or bonuses, or dispersing payments to officers and owners, unless those payments are directly related to performance of services for the business. So no, this is not the money that you use to go out and say, hey, I'm gonna go ahead and take my business from 10 buildings to 20 buildings. That's not what it's there for, okay? Again, this is a working capital loan. Now, you can structure some things a certain way, and we'll kind of get into that later in the presentation, where you can help audit-proof your business. But let's just get the basics down first. We first have to get the basics down before we start getting creative. All right, so again, working capital loan. Now, if you read the fine print, y'all, and this is in your closing document. So if you received a loan and this screenshot right here is from my closing documents, okay? Because I want to go through the process myself so I can understand exactly what everybody was going through. So this is what all of us have signed if you've received this money or you're thinking about the money. Loans greater than 25K. Borrow hereby grants the SBA secured party here under a continuing security interest in and to any and all collateral. That collateral includes the following property that the borrower now owns or shall acquire. So your home or any home that you purchase is up for collateral or created immediately upon the acquisition or creation thereof. All tangible and intangible personal property, including but not limited to inventory, equipment, instruments, including promissory notes, chattel paper, including tangible chattel paper and electronic chattel paper, documents, letters of credit, accounts, including healthcare, insurance receivables. I have a couple clients who's in the healthcare industry. That's now collateral to the SBA. Credit card receivables, deposit accounts. So what's a deposit account? Where you deposit your money. So that would be your bank accounts. Commercial tort claims, general intangibles, including tangibles and software, and extracted collateral such as terms and other things defined by the Uniform Commercial Code. So understand some, y'all. If you got this money, you've put up all of your assets as collateral. And it was kind of amazing because you were able to do this with electronic signature, with nobody reading none of this fine print to you. And you just knew like, oh my goodness, I'm approved for $100,000 or I'm approved for 200,000 or I'm approved for 50. Let me get that money. And you didn't read the fine print. So we're helping you understand the fine print now and what you signed up for, which is super important. So your assets as collateral, again, just taking it out of the context of the legalese where you can just see here crystal clear. Anything above 25,000, SBA lays claims to all of these things. So again, inventory, equipment, instruments, promissory notes, deposit accounts, the whole gambit. In addition, you should note that you cannot sell, lease, or license, or otherwise transfer any part of the collateral interest and collateral without the SBA's consent. So that list of things that's now considered collateral. So here's the deal. The SBA gave you a business loan based upon your current business, right? And they didn't come out and have an underwriter come out and ask for all of these other documents and things of that nature. So because they were in a rush to get these funds, make these funds available, they made it really easy for you to DocuSign, electronic signature, and have money deposited into your bank. But understand that before you can sell anything, lease or license anything with regards to your business, you have to get consent from the SBA. Okay, in other words, if you're a business that sells products, you don't need permission to sell the things you ordinarily sell. Just be aware of the clause and contact legal counsel if you may get rid of a business asset that might be included in the SBA claims. This was an article in Forbes magazine. So, use of funds. How can you use these dollars? So it's a bit vague, but in layman's terms, fixed debts, so rents and things of that nature, payroll, accounts payable, some bills that could have been paid, you know what I'm saying, some bills that could have been paid had a disaster not occurred. So operating expense, we kind of have a note in there, operating expense via our PASS program. Our PASS program allows us to have separate accounts, so you only pay bills out of one account. That's your operating expense. Well, if it's a bill that comes out of that bucket, out of that operating expense account, this is where the idle funds can be utilized. What you cannot use the funds for: dividends and bonuses, disbursements to owners unless for performance of services, repayment of stockholder principal loans with exceptions, expansion of facilities or acquisition of fixed assets, right? So again, I'm going to build out my building. I got some free money here from the government. Let me build out my building. No, that's actually not an option. Repair or replacement of physical damages, refinancing long-term debt. Well, let me go back to this repair or replacement of physical damages. Let that sink in for a second. So this is how they tweak this loan a little bit, because again, it's typically for a natural disaster, but you can't go out and repair, replace physical damages, right? But again, that's why you got to pay attention to the fine print here. Refinancing long-term debt. You cannot use this debt to refinance, your mortgage. That's not what the money, that's a long-term debt. You can't use the money for that. A lot of people have been doing that piece. I've been contacted a lot on that. Hey, Perry, can I use this to pay down my mortgage? No, you cannot actually. You cannot use that to refinance your mortgage. Paying down any other installment debt, via the federal agency or the government. Paying any part of federal debt, including SBA loans, except IRS obligations. So you can't use the funds for IRS, and you cannot use the money for relocation unless you get written consent from the SBA. So short list of what you can use the money for, pretty lengthy list of what you cannot use the money for. In addition to the funds, you have to keep good records. So this right here is absolutely terrifying to me. And at the same time, it's almost humorous. With us working with so many entrepreneurs and business owners, we see folks who don't even keep records for 3 months, 1 month, let alone for 5 to 3 years. So the SBA requires you to keep books and record for every dollar spent for the most recent 5 years until 3 years after the maturity date, including extensions, or the date this loan is paid in full, whichever occurs first. So 3-5 years from now, the SBA can come knock on your door and say, hey, we would like to see how you spent that money. And you're going to have record of that. So you should be thinking right now, like, how do I audit proof myself so that I don't run afoul and get in harm's way, because you have to prove where you spent every dollar of this money. Again, in here, kind of just getting into the language of what that looks like. This, again, is a screenshot directly from the loan documents. Again, talking about the borrower will obtain and itemize receipts, paid invoices, or cancel checks and contracts for all loans funds spent, and retain these receipts for 3 years from the date of the final disbursement. Okay. So again, they can come back and have to say, hey, we just curious, how did you guys spend that money? So be aware of that. So buyer beware, do not repeat. And I'll say this again, I'll repeat it again, do not commingle the PPP and the EIDL funds. So both of these are SBA loans. Okay. So a lot of confusion in the marketplace is everybody's saying, oh, did you get that SBA loan? Well, which one are you referring to? You have the EIDL loan, the economic injury disaster loan, but also too, you have the PPP, which is the payroll protection program, right? They cannot pay the same expenses. So if you receive the PPP and you're using that to cover payroll expenses, you cannot jump into the EIDL and use that to cover payroll expenses as well. So you really need to keep those dollars separate from each other, because they have to serve 2 different purposes. All right. Things that you certified when you signed up. There's been no substantial adverse change in the borrower's financial condition and organization in case of business borrow since the date of the application of this loan. So this is when you sign up for this loan, you have already certified this. Adverse changes include, but are not limited to, judgment liens, tax liens, mechanic liens, bankruptcy, financial reverses, arrests, or convictions. So when you sign up for the loan, you were saying, hey, I have a pretty clean rap sheet. All right. No claim or application for any other compensation with disaster losses has been submitted to or requested of any source. So I know a lot of folks are out there like, oh my goodness, there's all these different, funds and things of that nature, where you need to make sure you are seeking counsel, because if you're getting some money from the state and the county, but you've already, because from a disaster relief standpoint, but you're also too receiving your money from the EIDL, that may be a no-no. So again, that's where you need to seek counsel, just to make sure you're crystal clear and fully disclosing what you have and have not received. Where you're getting those funds from other entities, they should be asking you on the front end, hey, have you received any other monies via the, the EIDL? So something, again, to be aware of. Borrower certifies that no fees have been paid directly or indirectly to any representative attorney for services provided or to be provided in connection with applying for closing this loan. All right, so here's kind of the ridiculousness that I see on social media. I see people out here marketing themselves like, hey, contact us, we'll help you get the EIDL loan, and they're using that as a business. Actually, that's illegal. All fees not approved by the SBA are prohibited. So please do not go and pay anybody to help you get the EIDL loan. We've had people reach out to us. Hey, Perry, can you help us get the EIDL loan? Actually, no. You go to this website You complete the application, and then the SBA is going to determine whether or not they want to give you, whether or not how much, or whether or not they're going to give you financing. So there's nothing to help you with. Either your business finances are in order, and then when they do the credit check on it, they feel comfortable lending you money, or it's not. But you should not be paying anybody to get these funds. And we see a lot of that going on. I've even heard of folks creating LLCs and trying to get taxes backdated so they can get financing. Oh my goodness, y'all. So please, please, please don't get caught up into that web of madness. All right. Now, the EIDL loan has two parts. So you have the loan, but then also too, you may have received the grant. And the grant hit your account at a separate time than the loan. So it either hits you on the front end or hit you on the back end. I've seen both scenarios. You want to be crystal clear what's loan and what's a grant. The grant's usually going to be a smaller amount. Typically, the grant is coming in at about $1,000 per employee that you claim. So if you have 10 employees, you probably got 10 grand. If you said 3, you got 3 grand, whatever the case may be. But understand that these are two separate pieces of money. So the grant, you do not have to pay back. Okay, it's truly a grant. Really, it's an advance of the loan, but they're calling it a grant. Okay, now you don't have to pay it back. But if you receive the PPP money, Payroll Protection Program money, that grant offsets that money. The government is not going to continue to give you free money. So in short, let's say that you got $10,000 from the EIDL grant. So that's the $10,000 that you do not have to pay back. But you got say $50,000 from the PPP, the Payroll Protection Program. Well, now it offsets that number. So instead of you being able to get $50,000 forgiven, you can only get $40,000 forgiven. So understand that when you go to file for forgiveness and apply for forgiveness for your PPP, that $10,000 is going to ask you that you receive the EIDL money. If you received the EIDL grant money, if you received that portion, then that is going to offset, and you're going to have to pay back that $10,000. So just something to be aware of. So what should you do? So I know up to this point of the presentation, you like, Jesus, Perry, this sounds absolutely horrible. No, I'm not saying that at all. I'm just making sure you are crystal clear to the rules of engagement and where you are in this entire process. So what you should do right now, if you receive this money, is take a deep breath and realize that you are lucky. Never before in my 17 years, or historically speaking, has business financing been made so readily available. You know, there's business owners who couldn't go to the bank and get a signature loan for the business for $1,000 are getting, hundreds of thousands, tens of thousands of dollars. So this is a true game changer. Okay. So what you want to do is make sure that you're using the money wisely and prudently. So first of all, realize that you're lucky. I'm going to give you a couple steps here now that you realize that you're lucky, because you're still in a good place. If you receive these dollars used the right way can really, really change the trajectory of your business and position you to where you stop accidentally killing your business. So step one, and I know this is kind of, counterintuitive, but step one, act like you never received the money. So I was working with a client of mine and they said, well, Perry, what should I be doing with this money? And I said, well, act like you never got it. Well, Perry, I did get it. And what should I do with it? Act like you never received the money. So here's the deal, y'all. The guidelines were so loose with these dollars. Under normal circumstances, there's a pretty good chance you would not have never received this amount of money. So what would have been your course of action had the EIDL never been made available? Sit down and think about that first. That's your first course of action. If these funds were not available and not sitting in your account right now, what would you be doing to make sure your business is able to survive? Do that first. That's your first step. I know it's kind of mind-blowing. And my man in his mic turtleneck, he appreciates it. So totally mind-blowing. Step two, fix your underlying cash management problem. Again, if 83% of businesses are failing, they were failing before the pandemic, which means there was a cash management problem before the pandemic. Put a hard pause and fix that cash management problem before you spend a dime of this money. You have to fix the core issue before you just start throwing money at it. You cannot go and put a Band-Aid on shit. It never works. You need to clean it up first and first fix the cash management problem before you spend any of this money so that you're crystal clear on where those dollars need to go. Step 3, segregate your accounts. Again, going off of the stats and also to our experience in working with entrepreneurs across the country, you need to segregate your assets. You need to separate your income from your income account, from your expense account, from your profit, from your tax. If all the monies are sitting in one account and you receive these dollars and it's mixed in with all the other money, you don't know what's what. And you're going to end up spending the money inappropriately in commingling funds, or as we call it again, micro embezzling. So one, separate the accounts. Get you a separate account and throw that money in. Step 4. Now this gets a little technical, so stay with me here. Calculate the cost of funds and the required ROI, return on investment. Here's an example. If you received $50,000, so you borrowed $50,000 from the SBA, the Eidl loan, at 3.75% over the next 30 years, how much do you have to pay back? I'll wait for it. Anybody want to? Nope, I'll tell you guys. 50,000, 30-year term, 360 months at 3.75% means that you have a payment of $231.56, which ain't bad. That's a digestible payment. That's a pretty good payment. Nobody's going to argue with that. But understand that over the course of that loan, you're going to have $33,360.81 of interest, which means that $50,000 actually costs you a total of $83,000. So that is your total payback over the 30 years. Okay. You want to be crystal clear in that. Now, this is not a new concept. This is the same deal with 30-year mortgages. Typically on a 30-year mortgage, if you get a mortgage for $100,000 over the course of that loan, you're going to probably end up paying, $250, close to $300,000. You know what I'm saying? That's in your truth in lending documents that people never read. So again, this is not a new concept. This is how interest and loans work. So understand that. So in short, you need to be able to make $1.60 for every dollar you spend or you're losing. So let that sink in from an ROI standpoint. If you go to spend these dollars in your business, are you getting in return for spending that dollar $1.60 in value? That is your break-even point. So you kind of want to think about that before you start spending dollars. If you're spending money on something that's not increasing your cash flow or reducing your debt or adding value to the business, then you might want to rethink spending those dollars, because you're going to be on the hook to pay this back. And if you blow this money and you have 30 years, so a whole lot can happen in 30 years. Shoot, we saw a whole lot can happen in 60 days when the pandemic first hit. So understand, if you're going to spend those dollars, you want to be wise and prudent and very slow to pull the trigger, because anything below that $1.60 ROI is going to be a loss. So that's a required 160% return on investment. So we actually have, for those who don't know how to calculate the ROI or just need a calculator for it, we actually have an ROI analysis worksheet inside our PASS program that just makes it crystal clear where people can actually see, hey, if I spend here, the perceived value is this, and this is my ROI. Again, being able to make those decisions. Step 5, track everything. You want to track, you want to document, you want to save, you want to try to make yourself audit proof. Now, I know this is a challenge because, again, with working with hundreds of entrepreneurs for the time that we have, the majority of them do not do a good job tracking. Okay, so you want to have systems in place to track every dime of this. So again, you want to track everything. So again, you want to try to position yourself to audit proof the business, because if the SBA comes knocking on your door in 3 years, you want to be able to produce not just one form of documentation, but several forms of documentation showing where these dollars have been spent. And y'all, take this seriously. So on the criminal side, a knowingly false statement for the purpose of influencing an action by the SBA is punishable by up to $1 million in fines and up to 30 years in prison. Additionally, such actions would also be subject to mail and wire fraud statutes, violations of which can result in criminal fines and significant time in prison. A false statement on a loan application is the first step to potential investigation for the violation of these laws. So if you already fibbed on your application, please don't make this worse by using these monies inappropriately, right? Because if you fibbed on the application, it's a good chance they may come back and review what you said, and hey, we want to see those documents, and you want to make this. So just take this seriously, y'all. The government can hold a borrower responsible up to 3 times the amount of the SBA loan if the borrower made a false statement in the loan application or other representations to the government with reckless disregard for the truth or falsity of that statement. The relevant statute, the Federal False Claims Act, is the government's primary enforcement tool for clawing back federal money that was obtained through false representations. False statements can include a statement in the loan application that the lender to approve the loan, or subsequent representations regarding utilization of funds provided by the loan. So not just, hey, how did I fill out my loan application, but how the funds were used. Again, document. This is phenomenal money. This is a phenomenal opportunity. But the loans have really good terms. Make sure you're just following the guidelines and you'll be okay. But you got to get crystal clear in what those guidelines are. So next steps. First question I have for you here. We've covered a lot. Do you have a proven system for cash management, or will you run the risk of accidentally killing your business? Hard pause. Are you 100% confident that you have a system in place that can handle this workload? Okay. Would you like to see a proven system? I'm going to show you guys exactly how we handle and work with clients in this way. So first of all, let's talk about systems. Why are systems important? I love this saying, this quote here from John Maxwell: systems allow ordinary people to achieve extraordinary results predictably. Whether you're a business owner, an entrepreneur, a school teacher, a doctor, an athlete, systems are key. When you look at, I'm a basketball head, obviously played college basketball. You look at Kobe, rest in peace, Kobe and Jordan. People like to compare them and things of that nature. We're not going to get into that dialogue. But what do they have in common? They won a lot of championships. But what more do they have in common? They only won championships when they were coached by Phil Jackson. So they had the same coach, and they ran the exact same offense, the triangle offense. That system allowed the star players, the Michael Jordans and the Kobes, to do their thing. But what it really did, because those players were, Jordan had no problem putting up 60, 70 points prior to, the triangle offense. He was doing that prior to and couldn't get through the playoffs. But what the triangle offense allowed was for those role players to now have a system to follow where they could thrive, and that then turned into winning championships. So systems. You want to have a system. The system takes emotion out of your decisions, and also the systems allow you to see your business in 3D. And when we say see in 3D, we want you to really make data-driven decisions in your business. So one of the first steps here, and I know this is not jumping right into, hey, Perry, how do I manage the money? But I highly recommend you get this book. The book is by a friend of mine, Chuck Blakeman, best-selling book here. It's actually probably the most powerful business book I've read in the past decade. Making Money is Killing Your Business. In the book, Chuck says that a business needs 3 systems. It needs a systems for marketing, a system for operations, and a system for finances. So typically, most businesses, small businesses, cannot afford a CFO. The average CFO salary, medium salary, is about $371,000 a year. So most businesses who are doing less than $1 million cannot afford to pay a CFO. So if you cannot afford the individual, then you need to invest and have the system so that these dollars are being managed appropriately. Okay. Here are just some of our clients who just have some things to kind of say about our system, because again, this is a proven system. This is nothing we're pulling out the sky. Our results pretty much speak for themselves. So we have Aaron here. I cannot thank Perry and the team at Diamond Equity Advisors enough for the peace of mind, your expertise, and calm spirit has given me with respect to my finances during the pandemic. You have consistently gone above and beyond to make sure that I understand how all of the financial levers work together. Your guidance is the reasons I've been able to sleep more soundly over the last 90 days. Please extend my heartfelt appreciation to your team as well. Aaron, thank you, Aaron. We have my sis here, Chandrita. Listen, if you have a small business and Perry has not looked at your financials, please consult with him immediately. Tell him I sent you. In one meeting, this man has shown me how to, even though my business is doing well, I was self-sabotaging. That's the key. Most of us, I'm saying, if you have a business that you believe is doing well, doesn't mean that you're still not self-sabotaging yourself, accidentally murdering. And today I implemented a strategy he tailored for my business, and it's literally giving me chills. He is the ECFO. Bub, I'm over here grinning in the ear. Thank you so much. PS, I bet I won't owe the IRS a dime. You have my friend here, Dane. Tears of gratitude fell from my eyes in the moment I realized Perry had changed my financial future forever. For many entrepreneurs, a basic financial education is sorely lacking, leading to immeasurable losses of money, time, and opportunity. We have Kevin here. Hey, I just, I thought this was just a good shutout. He said, I'm one of the best in the financial service industry worldwide. And then also, too, you have our friend here, Chuck, author of Making Money is Killing Your Business, just giving us a shout out on our podcast. So again, our results speak for themselves. You can visit our website and check out some of more of our testimonials. And here is our system. So I'm going to give you guys, this is the exact system that we use. So have an eight-step proven financial system, which goes from getting crystal clear on the vision that your business needs to go in to be able to give you, help you reach your personal goals. We tell our clients your business is simply a vehicle to get you to your personal goals. So let's get crystal clear on your personal destination. How to assess the business, how to establish the right accounts, how to analyze what to keep and what to throw away, how to streamline your budget, how to handle your financing, i.e. your EIDL loan or your SBA loans, how to make sure you're positioned correctly for taxes, and also to position yourself for growth. So what if you had a system that literally made it crystal clear on what you need to get rid of out of your budget, what was a one-off, if you could just go right into the system and at any given time be like, you know what, these are my monthly debts. These are the things that are reoccurring. These are things I need to get rid of. In this case right here, and these are actually some of my numbers. I went in and did this here recently and when I had some vacation time because, hey, I'm a business owner as well. And again, without a system, I'm going to make emotional decisions and decisions that are not data driven. So I use the system as well. And this one exercise right here, kind of just looking at my monthly debt, I freed up over $300 of overspend, which I then redirected into some investment accounts. So again, seeing everything on paper. We tell clients all the time, if it doesn't make sense on paper, it'll never make sense in real life. What if you had a system that told you exactly where to put your money monthly? So this is one of our dashboards here for a client where we can see, hey, when that money comes in to your business, the revenue comes in, like in this case, 30,000 came in, we moved 30% over for materials and subs. And then from there, they knew exactly to move $1,000 over to their profit account, pay themselves $10,500, move $3,100 into their tax account, leave $6,300 in their operating expense so that those funds were commingled. So what if you had a system that told you exactly where to put the money and you didn't have to try to figure that thing out? And in addition, a system that allows you to actually proactively set profit aside. So not wait for your account to tell you if you're profitable, but that you actually have profit throughout the month so that when the quarter comes up, you can pay yourself a 50% profit distribution. In this case right here, a client was able to pay themselves $5,000, or if you need to pay off debt, be able to pay off debt. Also with this system here, now you can make your quarterly payments on your taxes and not get behind on your tax bill. Super important. What if you had a system that told you exactly how to pay your debt off? This is one of the kind of probably one of my favorite exercises to go through with our clients is, helping them annihilate debt. See, debt is one of those emotional things. Typically people pay off debt based on, how they feel about the debt. Oh, I really hate this debt. That's what I'm going to pay off first. Well, again, we need you to make data-driven decisions. Our system allows you to do that. It allows us to organize the debt and put it in order of priority based upon our cash flow index calculator. What this does is not about which debt has the lowest interest rate. It's about which debt has the highest toxicity or it's the most cancerous to your cash flow. So that's the first step we want to knock out. And a lot of times it's not the debt you would think would be. But again, that's why we have a system in place to take that emotion out the equation so you know exactly what to pay and when to pay it off. So what if you had a system that told you exactly that you're going to pay, this debt off first, pay this debt off second, third, and fourth? What if you had a system that lets you know exactly what your ROI is? So this is our ROI analysis form right here, worksheet, where you can literally plug in your expenses and your revenue, and it tells you whether or not you have a flat ROI, a 100% ROI, or a negative 35% ROI. What if you could do that for every aspect of your business? So whether you were talking about your staff, whether that you was talking about your product, whether you're talking about your marketing, we want you to be able to look at your business the same way you would look at like a 401k statement or a stock statement or whatever the case may be, where you're looking at, hey, what is the ROI this particular month? And then you want to look at each individual expense and know exactly what the ROI is, because this right here immediately tells you where you need to cut and where you need to double down at. So if you're interested in learning more about this system that we can offer you here, hey, schedule a consultation with us. We have 20 spots available. We put a notice out here recently that we're actually going to close the doors on taking new clients effective September, and that's not a sales tactic and along those lines. It's just the fact, because in light of everything that's going on and with respects to the pandemic, elections, the stock market skyrocketing and being positioned for a big time correction or a crash, we want to make sure that we're working with our clients hand in hand to make sure that they're positioned for success. So we do have some spots available for people. So make sure you take advantage. We have 20 of those available. So definitely go to, the www.mycfo.as.me, increase your revenue call. We'll have a conversation with you here. And if it makes sense, we can work with each other. Even if it doesn't make sense for us to work with each other, I hope the information was super, super valuable because, again, the money is great money with great terms, but you need to make sure you're crystal clear on what you signed up for and what your obligations are, and make sure that you're not accidentally killing your business. So again, Perry Jeffries here. You can go to perryjeffries.com to kind of learn a little bit more that we have to offer. I highly recommend you go there. We have a bunch of free resources there that you can take advantage of. And that, ladies and gentlemen, will be it. So what I'm going to do now is close out of the webinar and open up for some questions that you may have. So bear with me here 1 second as I navigate through the tech and get this thing going. All right. Boom, 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 boom. All right, bear with me here, y'all. Let's see if I can get out of this thing. Okay, let's open it up. Boom, let me find my chat room. Bear with me here. And we can start recording too. Cool.